we get asked all the time of like, what's the TAM? Like, how many creators are
Mm.
there? And I think it's a moving target. I think we generally like to focus on YouTubers, but right, like you see the likes of Huberman or Dr. Becky, who, got her start on Instagram. And, those are creators in the same way that Doug DeMuro is, or at least from our view. And so really, as it pertains to kind of the slow version of creator, it's anyone who's building a community with deep trust and distribution.
Colin, how you doing today?
I'm doing great. I'm pretty much at the bar here, so life's
I
good.
was gonna say I didn't know that you were a big drinker, but maybe you are.
I enjoy a good cocktail from time to time.
Awesome, awesome. Well, I'm excited to join you for a cocktail in Austin at the end of September. We're going to be having a little meetup. We'll leave a link in the show notes for people who want to check that out and see us in person. But today we've got a cool episode with Megan Lightcap from Slow Ventures, all about investing in creators. How does that sound?
I'm excited. I think this one's
I
going to
kind of want
be
to ask
totally
her if
new.
she thinks you're a real creator or not, but we'll see if I
I'm pretty sure it's a hard
or
no, but
maybe I should ask about myself if I'm an actual creator or not. I don't know if we'll put her on the spot like that, but it's gonna be a really great episode. And before we get into that, I want to talk a little bit about our sponsor for today's episode, Carta. So if you're looking for a simple and highly professionalized solution to form and administer an SPV, there's a set of tools out there that we think is worth taking a look at, and it's built by our partners for today's episode over at Carta. So whether you're looking to launch a first fund over here like our friend Colin, or just start with straight simple SPVs like I do, Carta is an option that we all know and trust, and you can check them out at carta.com or just run a simple search for Carta SPV. How does that sound, Colin?
sounds exciting. And what?
You know what I'm excited for?
Tell me more.
We have an upcoming episode with Peter from Carta. Don't you know him?
Peter. Yeah, Peter Walker.
Yeah, didn't he go ahead and go viral last week on Twitter? They shared some chart about venture returns for funds, or
Oh
with
yeah,
some of his data.
he shook things up. I think the past couple years cohorts, TVPI and DPI, all the good venture metrics were not looking so hot.
But I
And
think I saw a few rebuttals from VCs that basically said, hey, that's kind of the point. If a company ends up doing really well and it's multi-billion, it's going to take a little while, for it to IPO or exit or M&A. So I don't know, maybe that's a good question we can ask him about when he comes on the show.
yeah, I'm excited to dig into it. There's like a lot of valid points on all of it.
Yeah.
And I think maybe the data will just point us in the right direction. So I'm excited to talk to Peter. It's gonna be
All
good.
right, cool. Well, that will be an upcoming episode. But for today's show, we've got Megan Lightcap. So I'm excited to dig in. Let's do it. All right. Megan Lightcap is an investor at Slow Ventures, a seed stage venture fund backing founders and companies across all sectors. At Slow, Megan primarily focuses on backing creators, making direct equity investments into their holding companies to enable growth across their content, businesses, and communities. Prior to Slow, she held leadership positions at two early stage e-commerce businesses and was a growth investor at Elkaterten, a consumer focused investment fund. Megan also started her career in investment banking at JP Morgan. Megan, how are you doing today?
Good. Thanks for having me, guys.
Yeah, I'm excited to chat. You and I connected recently all about the creator ecosystem and the investments that you're making. And selfishly, I was like, oh, this sounds like a great guest. I don't think you even knew that we had the podcast, but I was like,
I
this
did
sounds like a
not.
great guest for our podcast. So I kind of roped you into that one, huh?
Yeah. Yeah. I
Awesome.
actually had no idea that you had a podcast. So news to me.
We're very popular, as you can tell.
Yeah, I'm actually shocked that you haven't heard of it, Megan. A little bit of a slap in the face, but all good. We'll move on. All right. So, how many investments have you personally made out of the fund, and what size is it?
So there's two ways to think about the fund here. So there's our core seed fund,
Hmm?
and then there's the investing in creators, which is my main focus. So on the creator side, I think I've done 5 deals. We have seven total. And then on the core fund, I think I've done 2 or 3, and then a handful of kind of smaller angel checks.
Very cool. How many investments have you personally, since we're going to focus on the creator fund, how many have you done this year, or do you plan to make?
We've done a handful this year, and we want to do a bunch more. So it's top of focus or top of mind for me. So yeah, we have a bunch of good ones in pipeline.
Very cool. What's your average check size?
So we'll invest on the creator side, we'll invest anywhere from 500K up to 2 million, generally in exchange for, call it like 5 to 10%.
Very
And
cool. And go for it, Colin.
oh, I'm intrigued, not to go break up all of Harry's questions, but what are you actually investing in terms
Yeah.
of like, is it a hold co? Is it a company? I mean, because I've seen some creators create like cars and bids. I do marketplaces, so that's what I'm familiar with. Like cars and bids did the
Yep.
marketplace for cars from YouTube channel. So yeah, what are you investing in? What do you get ownership in?
Yeah, so it's exactly right. It's their holding company, which basically houses, you can think about it like everything creator related, from content and media to joint ventures, licensing deals, a marketplace business that they may have created, different C corps that sit under it. So this model is actually becoming more and more popular with creators kind of as they have different business lines and kind of different components to their business.
Got it.
So you don't have to pick and choose winners that way. You sort of get involved with everything that they're doing.
Yeah, I mean, I think for us, we like to back creators that are explicitly building different businesses. And, as seed stage investors, it's important that, yeah, we're not kind of in the position, at least at the early stage, to pick and choose the projects that we think are ultimately going to be the most successful. As you know, right, like the success of a company depends so much on the creator's focus and attention on it. And so we like to be holistically kind of aligned to the creator across whatever they're doing, with the option to have more exposure to a company that they create later on once we know it's working and it's kind of a standalone thing.
Does this
Yeah.
change the like whole like in venture, like it's got to be a Delaware C corp, all this kind of like like conventional wisdom? Does that change all of that?
I mean, just from a simple structure perspective, generally the holding companies are LLCs, but the underlying companies are a traditional business. Um, so typically, yeah, that parent co is an LLC.
Got it. So yeah, it's not as vanilla as like the typical, I guess, VC investments and things like that. So I guess you're getting some like rights in the LLC, some kind of like ownership percentage. Um,
Exactly.
yeah,
And
interesting.
Exactly.
don't worry, Colin, that was basically my last question before
Uh,
you interrupted me. So all good. But I'm going to take back over because when you were talking, Megan, it kind of made me think like, what is your definition of creator? Am I
Yeah.
a creator? Is Colin a creator? What's your definition? And what do sort of, when you're talking to people, what do they think? I'm curious if it's, if everyone's on the same page or not.
No one is on the same page whatsoever.
Okay.
I mean, I'll get comments, from folks thinking I just scroll TikTok all day and that's all I'm doing. I mean, look, I think,
And
we
you're
get the
like, I
question
only
all
do
the.
that 1 to 2 hours a day, right?
Yeah, exactly. I have a time limit. Funny enough, like I really don't spend that much time on TikTok. It's mainly YouTube, Twitter, some Instagram,
Hmm.
which is really a lot of podcasters now, is really our main focus. Um, we get asked all the time of like, what's the TAM? Like, how many creators are
Hmm.
there? And I think it's a moving target. I think we generally like to focus on YouTubers, but right, like you see the likes of Huberman or Dr. Becky, who got her start on Instagram, and those are creators in the same way that Doug DeMuro is, or at least from our view. And so, really, as it pertains to kind of the slow version of creator, it's anyone who's building a community with deep trust and distribution on the internet. I mean, or not, I guess, who, it kind of owns their vertical or niche and wants to launch different businesses, around their media, basically. So the term creator, the definition creator changes wildly depending on who you're talking to and kind of what their stated use case is. But we tend to take like a pretty broad view, at least, based on the types of platforms that they're on.
Yeah.
Yeah.
So I sort of like this, the slow, as in slow ventures, the slow definition of creators, sort of like you said. And you mentioned this focus on YouTubers, even podcasters. I feel like one thing that's always stood out to me as someone with YouTube and, podcast, it's like the connection that you make with your audience. I think there's something about hearing them and seeing them that kind of
Yeah.
like makes you feel like you know them. Is that what you think? Is that why you're focusing, or is that just sort of a side benefit, or what do you sort of think about like that trust component? Does it have to be audio and visual?
I think there's definitely a conversation around the trust piece, right? What exactly what you're describing, video, audio, what kind of like what that can do in terms of kind of this parasocial relationship and trust. But even more like basic than that, YouTube just has an unbelievable monetization scheme relative to TikTok, Instagram, and some of the other
Hmm.
platforms. So you see a lot of the more serious creators there, folks who are doing it full time, and there's just higher friction, right, to longer form content production. And because they're earning revenue from AdSense, it's this amazing source of non-dilutive financing that can kind of sit alongside our equity. Whereas if you think about
Hmm.
like a traditional venture-backed startup, they really only have the capital on the balance sheet that they raise until they turn a dollar of profit. Whereas if you're a creator, you're earning cash from AdSense and brand deals and sponsorships and whatnot that can really juice what you're doing and kind of get you farther. So that's why we take YouTube seriously. But certainly I think there's something to be said about, this like audio visual kind of component. I mean, I think podcasting is like a uniquely interesting medium for that, where if you're walking around and people are just like in your ear for hours at a time, like
Yeah.
their inflection, how they talk, how they ask questions. Like it's really intimate if you think about
Yeah.
it.
Yeah. Maybe you know them without knowing them, right? And therefore you think
Totally.
they're more important and bigger than life than they actually may be, which I think is kind of an interesting thing. With
Yeah.
the whole creator space, I think has been really interesting to me because uh, the whole like I don't know, I've built a bunch of startups, and the issue I always found over time was always demand aggregation at scale, right? And that's the hardest piece, right? And to
Mm-hmm.
make it cost effective. And that's what I think, creators in a lot of ways, what you're betting on is getting demand aggregation at scale early, right? And making
Yep.
it, relatively cheaper over time with high retention. And so I view it as like this really nice, it's more of this like bet on if you can aggregate demand and make a relationship with them and then ask them what their problems are, you can solve a bunch of
Yeah.
different things for them. Like that's I think the opportunity set in my mind, and kind of how I always viewed, if you get an audience, you just ask them what they want and then
Totally.
solve it for them. So
Totally. And it's funny. I was listening to this entrepreneur. Have you guys heard of Adam Sandlow? Sandlow.
sounds
He
familiar.
he,
Yeah.
he recently was on Invest Like the Best, and he's basically this like print media entrepreneur, and so has a bunch of like print magazines. I think Lux is one of them. He has like an interior design property, but he kind of describes exactly what you just did, which is use the media really as like your distribution and top of funnel, and then use that to spend time with your audience members and deeply understand what their pain points are, not necessarily as it relates to like the media and content, but just industry pain points. Like, what are you guys dealing with? Like, what's top of mind? What keeps you up at night? And as an entrepreneur, he's like, I can go hopefully build a business that helps solve those problems and then sell it via my media and kind of community and distribution. And it's the same exact thing I think we're seeing with creators, which is you're so close to the metal on some of this stuff. You basically have a direct line to your future customers to build something that is so rightly built for them and then sell into it at near zero CAC.
Beautiful. I love near zero CAC. Yeah, I mean, because to create good content, you have to know your audience well, right? Which inherently means that you have some depth of understanding of them and some relationship. So yeah, no, and you see this with Mr. Beast, right? Like he's kind of figured out what people want from him, and that it isn't
Yeah.
low quality, just volume. It's like it's got to be high quality, like his content. It's got to be high quality, and like you will get backlash and feedback on it. I just think of like the burger and the all the different stuff he's done and kind of what he's learned from that. It's just
Yeah.
it's been interesting. So I guess one question I had on like the venture model, right, is very much predicated on these like billion-dollar outcomes, like, get
Hmm.
significant ownership at a small scale, get it to $1 billion, exit, and like return the fund. And, like you said, there's so many more options with what you're investing in terms of cash flow and like what can
Hmm.
happen. How do you guys underwrite like the opportunity and the outcome? Like I'm intrigued by that piece of it.
Yeah. So I think people often automatically assume that the opportunity set is limited to like CPG, just because that's what people are see and are most familiar with as it relates to creators and celebrities and talent and whatnot. But the folks that we are excited about are actually building businesses that are venture underwritable. We're chatting with a creator. He's in the construction space and he's building a software business that he's selling into construction companies. And so it's actually B2B, number one. Number two, it's a software business. And if you ask him, he's like, I'm building $1 billion company. And to our earlier point of deeply knowing your customers and what they need and kind of what they're dealing with, he purpose built this company to basically like directly address all of these pain points. Um, so I don't know that there's infinite, right, venture underwritable opportunities here, but like they definitely exist in niches and places that I think people are tend to overlook.
What do you think about the sort of CPG kind of avenue for, it seems like more of the top creators, the top 0.1%. Everyone has a tequila brand these days, but I think we're also starting to see that, maybe some of these companies have got to 1, 2, 3, 5 billion, but maybe they don't hold that value because it's so
Yeah.
predicated on the brand or on the influencer. So how do you think about that? And also at the same time, with venture, it's like if you get out at the right time, it was a good exit too. So I know that's a bit of a loaded question,
Yeah. Yeah.
but what do you think about basically the CPG versus, some of these other areas?
Yeah, I mean, I think you've seen the proliferation of these CPG creator-led or celebrity-led brands because they're almost like the least common denominator, right, of what these folks can sell because they're so big and they're so
Mm-hmm.
general. So like
Yeah.
Mr. Beast, I mean, I don't know what the latest subscriber count is, 300 million or something. Like he basically could sell chocolate bars or like
Mm-hmm.
toilet paper, right? Like what is the one thing that you can sell to all of your fans?
Mm-hmm.
Um, versus if it's something like way more specific, the conversion is just a lot lower. And so even with celebrities, right? I think that's
Yeah,
why
that's a good
people
point.
generally default, some of these more general kind of consumer products. And then look, I think on the you know getting really hot out of the gates, like the interesting thing is like they're really expensive, like from a venture standpoint, they're really expensive. And so we
Mm-hmm.
actually we're pretty bearish on the like whole celebrity general entertainment creator stuff. One, because you kind of can only sell the generic super mass products, and then two, they're so overpriced because the
Mm-hmm.
numbers look amazing in the
Mm.
beginning. There's a lot of hype around it.
You mean
They
from
often
an
have
investor perspective,
from
though,
an
right?
investor, yeah, from an investor perspective, and maybe not overpriced, but they're expensive, right? And like a seed
Yeah.
investor's entry point really matters. And so for
Well,
us,
and
it's
also
just it's
there's
hard.
something about the like cachet of working with a celebrity that people maybe put a premium on. Like I have a bunch of friends,
Totally.
when they graduated college, they go work for the Los Angeles Dodgers for like 30K a year because I'm working for the hometown team. There's some cachet
Of
there, I guess you would
course.
say.
Of course. Of course. So for a lot of reasons, we generally tend to stay away from um, those types of opportunities and focus more
Mm-hmm.
on, niche vertical creators who are kind of deeply owning, a sector or category.
That totally makes sense. And there's a lot of good examples, honestly. The CPG thing I always find is like not in my mind not the best strategy because it's not a retentive product. Like you're
Yeah.
not
Yeah.
selling something that reinforces your kind of own growth loop, and it's like you're just extracting value. So I don't know. I feel like that's what Mr. Beast has done a lot more of in some ways is like trying to switch to products that are a bit more of like branding tool in themselves and like
Hmm.
make money, but also like reinforce the loop of like, hey, keep coming back to me, bring more subscribers in and like really get
Yes.
that growth loop. One of the companies I invested in is kind of, I guess, they met at Night Labs, and it's a company called Rare Candy. They do like Pokemon cards auctions and things like that. And so it's Lionheart is their one of the co-founders. So he's like, I don't know, 1.6 million, I think, YouTube subscribers. But their whole
Mhm.
model was predicated on like, hey, look, we have this like nerdcore audience. Like,
Yeah.
let's get them involved, let's get a community going, and then build the product around them. Right. And I think it's one of these things where you don't necessarily have the growth like you're saying of like some super celebrity of like here's the CPG product that's going to go like through the roof, and maybe it has staying power, maybe it doesn't, but you can build really sustainable businesses around these like hardcore audiences that are like doing what you want them to do all day every day, and just like being around them more allows you to monetize them. And so anyway, I'm becoming more and more interested in that model,
Yeah.
and I have like a general thesis around marketplaces plus something else, like marketplace plus community plus content plus SaaS plus fintech and SureTech. And I think it's really a very similar concept to what you're saying is like, hey, almost if you can bring the audience first and then add something onto it, it's like a content, it's like an audience plus model, right? Um,
Yeah. The community and the audience, I mean, that is the strategic asset, right? And
Yeah.
I think some folks tend to overlook it and kind of what can come out of. Yeah, I totally agree with you.
What do you think about since we've got Colin, the marketplace guy, and I'm sort of
oh
half a
man.
marketplace guy? What do you think about marketplaces for these creators? Is that a good opportunity for them, or building a marketplace off? I think Colin, you mentioned like the cars. Obviously, if you're a big car influencer, you do a marketplace for cars. What do you think about that kind of angle?
Yeah, I mean, I think the way we would think about it, honestly, is um, depending on the category that the creator is in, and then kind of take a more like fundamental, like, is this a good business? Depending on kind of the category dynamics, what exists, competitive analysis, all that standard stuff. But I mean, I kind of view it in the same way that I do like any kind of creator business of like, is there a reason for this business to exist? Is it, does it have a sound business model? And is the creator kind of uniquely positioned to do it? And so I don't know that I have like any strong point of view kind of on marketplaces broadly beyond it just has to be taken totally in context of like the category that the creator is in.
Yeah. I think one of the kind of models for this, and I'm not an expert, was like Meat Eater, Steve Rinella.
Hmm.
Like he had
Yeah.
a
Yeah.
show on Netflix, and then they
Yeah.
obviously spun out. And I think that was Chernin, and who's done a bunch of
Yes.
different models like this. Oh, and Cars and Bids for that matter. Yeah, no, I think is watching like, hey, you get that hyper specific group that can be really quite large, right? And you can create a content engine, you can do podcasts, you can add a marketplace if you want, but it's really like, yeah, it's just something they need or want, and that
Yeah.
allows you
And
to
if
scale.
you think about like the consumption patterns of that group, right? Like those are super high ticket items. It's a hobbyist category. People care rationally about it and are willing to spend not only time but like real dollars on different parts of the experience. And so yeah, I mean the hunting and fishing kind of outdoors enthusiasts, it's a great category. I think Steve and obviously the Meat Eater team has done a really good job there.
What's the reception been to this idea of investing in creators? Because I think it's pretty unique, or at least, from what I've seen, it seems like you and Slow are sort of the main ones kind of doing it in this venture fashion. Do you reach out to creators and they're like, heck yes, this sounds amazing. I want money. Is there convincing? What's it kind of been like?
Yeah, well, if you go to anyone and you're like, here's $1 million, or
Yeah.
kind of like, I'll take it. So
Sweet.
we kind of take the approach of, or at least I have taken the approach the last couple of years of like, let's just go educate the market. Like, what are we doing? How do we think about the deals? Who are the right people that we want to find? Here's how we structure it. Here's how we think about stuff, and kind of just like put the message out there.
Hmm.
And I think what you find is that if you get to the right people in the industry who are kind of in these conversations with creators day to day of, hey, I want to launch some sort of company or brand or business, I can do it bootstrapped, but it may take me 5 or 7 years based upon, my cash flow. What about raising a little bit of money? Like, do you know anyone who's doing this, or how do you think about it? And so we often get routed those opportunities, and we kind of think it's an interesting like filtering test of, if you're a creator, you want to raise money, the ability to like find us and get to us via a warm intro is actually a really good signal versus saying, doing totally cold outbound and kind of offering people money, which we do, by the way. Like there are, most of the interesting opportunities we see are, come inbound, but we do some outbounding, and that is really from, hey, maybe we have a thesis on the parenting category for whatever reason and want to go poke around and see who's doing some interesting stuff there. And we'll do some outbound. But by and large, these opportunities get routed to us kind of through different industry channels.
One question for you is like, what are the perils that you guys have learned, or like the gotchas of investing in creator, like, where the head fakes, I don't know. I'm intrigued to
Yeah.
hear that since it's
Yeah.
relatively nascent.
Totally. Totally. I was actually just telling this to someone the other day. One of the biggest differences between seed investing and what we're doing, the sales cycles are just longer because it's not like you're a startup where you're running out of cash in 3 months and you have a burn and employees and you must close this round because of this property of kind of financing from different platforms, and these are cash generative. There's a different level of urgency, which actually is like potentially a net good thing. I think it forces people to make the decision like really eyes wide open and raise money for the right reasons and on kind of the right cadence. But that has been an adjustment of, I think you can, in traditional seed, you can close around very quickly from like first meeting to term sheet to kind of wiring the investment. It looks and feels a little bit different when you're dealing with creators. So that's been like my number one learning.
Got it. So Slow is a generalist seed fund. Is that accurate description?
Yes.
How does this a creator angle fit into the fund? Is it like number one focus? I mean, obviously, this is what you're focused on, but how does it sort of fit into the opportunities that you guys are looking at, or how do you rank it, or, sort of things in perspective there?
Yeah, I mean, I think if you ask the partners at Slow, and I know Harry, you know Sam Lesson a little bit, I think what you hear is our core seed fund, right? Like we're in all the right names, we have the right logos, we've done well, it's interesting, but it's competitive, right? It's where a lot of other seed funds are playing and other venture funds are playing. And so where I think we get the most excited and quite frankly have made the most money is kind of in these like fringe ideas around our core seed fund, whether it's creator or, we have a strong thesis on small business, or whether it's franchise, or, back in 2016, 2017, I was not around, but, Sam had an alt Ethereum thesis that led him to names like Solana and whatnot. And so I think those fringe things get people really excited, and kind of like the core seed is kind of just like the day job, if you will. So I don't know that there's some sort of like firm priority ranking across these different strategies. I think intellectually people get really, really excited about kind of these more novel and fringy bespoke theses.
Do you think there's potential in it for it to return, one fund, two fund, three fund, or anything like that?
We've definitely had these fringe concepts return the fund, not on any creator names thus far, knock on wood, but we definitely have had. I mean, Solana was kind of a huge outcome for us, and we have a couple other names that will also do really, really well on that kind of fit within these kind of alt theses.
Yeah. So sort of like, I think what you said that was interesting is like, it's something that everyone's kind of excited about, maybe less competition. You guys are a bit out there. There's definitely some return. It's not a focus though, but there is like the potential upside. So sort of like a little bit of a bet, or not even an experiment, but I don't know, fringe. I kind of like that, fringe or adjacent to what you did. Although I don't know if that's demeaning, but.
No, well, so it's funny. I can't remember who I was speaking with, someone like in the venture world, and they were like, "Oh, where do you work?" or whatever. And I was like, "Oh, at Slow Ventures." And they're like, "Oh, like you guys just do weird stuff." And I was kind of like, it's like not the worst branding to have, or at least like I think we'd probably be happy with that branding. So I don't know. Maybe that's
Well, a
our
lot
vibe.
of the best and biggest outcomes sound pretty weird at first, right?
Fair enough.
Drive
Fair
some
enough.
stranger around in a car, some strangers sleep in your bedroom, right? All these other ideas. That's why they don't exist. So very cool.
Yeah.
Yeah.
Fair enough.
What I guess one interesting point about the, and I don't know if you guys have had any exits, so to speak, in the creator side, but I'm kind of intrigued because I know it's a hold co, but you're kind of buying like equity in them, which seems like
Hmm.
more like an evergreen position than it does a like closed end fund, like 10-year, these people have long lives hopefully, and more of an like an annuity almost, right, like off of
Yeah.
their lifetime earnings. I don't know. How do you guys think? I mean, I don't know if you guys have set this up as a traditional venture fund, but like, how do you guys think about continuity from that? Because I could see people selling off certain products or certain pieces of the business, but not
Sure.
necessarily the hold co, right?
Yeah. Yeah. So the thing we really hang our hat on with these creator investments are the company formation piece, not necessarily, I'm just in it to do brand deals and kind of generate, yeah, a cash annuity effectively. Like it's obviously an interesting product, but not necessarily how we think what we get excited about as venture capitalists. And so yes, they're like longer term deals, but I think, you know, the traditional kind of company formation pattern and then ultimate exit should follow that of a more traditional venture fund, maybe plus a year or two, right? Because you have this idea of you're investing at the holdco. Maybe it takes them 18 months to actually start the first company or second company or what have you. But like we're really indexing on kind of this company formation and less actually about kind of this cash flow component that we think about actually that more like tail protection or kind of downside protection.
But there is sort of like, I've been running my business for 10 years. I don't really plan on going anywhere anytime soon. There is sort of like, I mean, this is kind of just going to be around, if you build up a pretty solid business, 50, 100,000 subscribers on YouTube. I mean, you're making, five to $10,000 a month off ad revenue at least, plus all the brand deals. You have real revenue coming in, and it's kind
Totally.
of like, it's not impossible, but it's kind of hard to screw that up in
Totally.
a way. So I guess like this is kind of like a lifelong partnership, or what do you think?
Well, I think it depends on like if we met a creator and they were like, I
Mm-hmm.
that is my circumstance and I'm kind of just going to grow it at a healthy clip. Like they're probably not all that interesting for us. I mean, I think
Mm.
we really want creators who are going to take a big swing on company formation. And so
But
I
they
think
can
it's
kind of
just
take a big swing, even if it doesn't work out, and then they still sort of have that core business after that, right?
totally, totally. Yeah. Yeah. And in that case, like, you know, maybe there's some terminal value there and we figure out how
Mm-hmm.
to exit our position or whatever. But I don't, that's not necessarily how we think about kind of the big outcomes coming out of this strategy.
Fair.
Fascinating. This has been such a fun conversation. My head is spinning, and in a good way.
We might rename the title for this episode "Wannabe Creators" instead of "Wannabe Angels." That was my big shower thought the other
I
day.
like that.
So, Megan, really appreciate you coming on and sharing all of your knowledge about the creator space, and then also your investing strategy when it comes to this. So, you kind of mentioned you like the warm intro. Should we not leave your contact info, not leave slow, and sort of leave it a bit of a mystery in case anyone's listening, and that could be their first test?
That would be a very funny test and very on brand for slow. But no, people, I'm totally reachable.
Okay,
My
cool.
email is just megan@slow.co, or occasionally I check Twitter DMs, but I'm a
Okay. Yeah, I looked
professional
at your
lurker
Twitter.
on
You didn't,
Twitter.
yeah, you didn't seem too active on Twitter. So it sounds like maybe email, LinkedIn. And I know Slow is often putting out a lot of cool content, and Sam is tweeting
Yes.
out screenshots and things like that. So I think the whole ecosystem of folks at Slow are always good follows. So we'll leave links to that in the show notes, and really appreciate you coming on, Megan.
Perfect. Thanks for having me, guys. This is fun.